All right, welcome back for another episode of Carnivore Trades. Today is Wednesday, December 7th, 2022. If you've not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, market's really flat for most of the day here. Spiders down just 17 basis points. Triple Q's down 41 basis points, but we did trip a key technical level here on the daily chart of the spiders and the SPX. So we closed below. Yesterday we talked about that. It was very close. It was basically like a width of a hair above that level, and we closed below it today. So 393.48. So now that is a failed inside bar on the daily chart of the spiders. It's also the same thing there on the SPX. When it's this close, it's good to look at it, but there you have it. 39.33.78 versus 39.38.58. So we do have a failed pattern here on our hands. So that is not a good look here. So excuse me. Essentially the psychology of the market here. So this was the big, Powell's pivoting type pump, right? The lows are in, bear market over, all-time highs by next year, that type of kind of sentiment, and we're closing below that. So now it's negating that whole move, and it does look like, we gapped up the following day here, and it looks like they distributed right into that. So we have to be very careful with this market. I think this is a sell signal. We talked about it 2 days ago as well as yesterday, but the transports led, right? We always want to look at the transports, right? The Dow theory tells you the transports are a leading indicator, and we closed below that level. There's a green bar from last Wednesday, and we closed below that on Monday. Also XLF, which has been kind of the fulcrum of the market here, that also on Monday closed below that green bar low, and today, or rather yesterday, closed below this pivot here, and did close negative as well. Although it did not make a new low, it's still kind of holding that 100 moving average, but I think we are, poised for a move back down to gap fill, maybe these moving averages. So you have a necktie between the 50 and 100. Take a look at Bank of America. Just getting absolutely smacked today. Well, really yesterday more so. Goldman down as well. This has got to hold 360 here. Otherwise, it's right back to that 50 moving average. You have a gap fill right there. But this has no support here on the way up. Same thing with JP Morgan. No support. It's just short squeezing for the most part, if you ask me. But we do have a failed pattern here on the spiders. So I do think you can sell rips now. I will say that. And we had the same thing on the Russell yesterday. So that was kind of another domino to fall. We talked about DJT and XLF. Obviously, yesterday the Russell closed below this pivot low, closed below the Wednesday low. So that is, definitely significant when you see that. Now, I do think we get a bounce here. So I just want to be clear. We do have put call composite closed at 1.22 today. So pretty high. In fact, I'll just flip over so you can see it. It's a pretty good reading, pretty good print there on the put call composite. So there's definitely some short FOMO for sure. And that leads me to believe we can bounce. There's also, I do have a minor cycle date coming up today. Previously going into today, if we had stayed above this pivot here and we hadn't done so much technical damage on the transports, fins, etc., I would say, if we had simply tested to say, look, 395, we'll say, and we had held up and kind of, pushed up, or I should say, if today we were at 395 instead of 393, and yesterday we didn't get that low, like let's say we only got down to 396 or so yesterday, then I would say there's a really good chance we put in a higher high. At this point, it's looking like it's going to be a lower high, and that's just based off of the failure here, and the failures that we talked about before. The transports, XLF, those are major red flags. Now the triple Qs, believe it or not, they actually held up. They actually did not negate this pattern. So 279.97 was the low. We did close above that for the second day in a row. So the NASDAQ showing a little bit of leadership here, although it's not like, it's not like anything crazy. It's really, take a look at Apple today. This thing got hit pretty hard outside of the last, 20 or 30 minutes. It got a nice bit up. Tesla looks very weak here. Take a look at intraday. That closed below the Wednesday pivot. But the hourly there, I mean, you're just kind of down, bear flag, down, bear flag. So, big tech is definitely on the weaker side. What's holding the market up right now, if you ask me, is the semis. So semis actually closed basically about as flat as you can be, down 2 basis points. And they never really made lower lows intraday today. So they actually held up. And that is your reason for, if you ask me, the triple Qs hanging in there. I think Google also, Google rolled over. It did look all right earlier. Microsoft showing a little bit of leadership. So hanging in there okay. But yeah, mostly the semiconductors, if you ask me. And that's the only other reason why, and same thing like I said yesterday, the 2 reasons why I'm not basically saying all in short is the semis are holding up. And we've tested that green bar low now 2 days in a row, and it's passed both times. Doesn't mean it can't happen tomorrow. Doesn't mean it can't close it down below that tomorrow. But for right now, it's holding up. And then the other thing is the volume. So we have a nice up move, declining volume with the pullback. So that's the only thing saying that, well, first of all, I think we can bounce here. But that's really the only kind of caution flag here I have on the short side. And then, of course, the other things kind of cropped up today. Like I just said, the put-call ratio definitely elevated. But at the same time, take a look at the VIX. That looks like a pretty solid breakout to me. Doesn't mean we can't curl back down. Last time we did this in August, where we had this, and really it's typical, right? So the last couple of times, so March, we had this big falling wedge. We broke out, then we kind of curled back down a little bit, and then we blew up. And then we had the big one here in August. We, had a big pop outside of it, and then we curled back down a little bit, and then we pushed up. So could be a similar type of setup coming up here. So I do have a minor little cycle date here coming in today to tomorrow. So we could bounce up, maybe test 400, maybe the 200 moving average again, maybe this downsloping trend line one more time. And we'll see where the market trades into FOMC and into CPI next week. We have PPI, I believe, on Friday. PPI is typically a nothing burger for the most part. The market doesn't really go off that, even though I think it should, but that's just not the way it goes. So I don't make the rules, I just follow them. But we'll see how we trade up into CPI. If we're up significantly into CPI and we don't make a higher high, after the reaction within like a day or two, that would signal huge problems to me. And I think that this market would be very vulnerable to a rollover. So in any case, near term, I think we could probably test 390, maybe even on a small gap down tomorrow. I wouldn't rule that out. But I do think we get a bounce, if not tomorrow, then, the next day. But for right now, this market is definitely showing signs of weakness. A close below any power bar like that is never a good sign. That's a failed inside bar, and that needs to be respected. So if you ask me, it's just a matter of time before the Qs do the same thing. By the way, we also have, to look at the 390 level on the spiders, you kind of have the 50 moving average here, as well as this kind of upsloping channel on the triple Qs. So that could be a level to watch to coincide with the 390 level on the spiders. I think you get a bounce off of that. And we'll see, does it make a lower high? Can it get back above 290 again? Remember, we made a higher high and we never had follow through here. And the Qs never got anywhere near the 200 moving average, whereas the spiders at least got a little bit above that for a couple of days. And remember what I said, for a while, was like, I want to see the SPY get above the 200 moving average on a closing basis for a couple of days, because it's going to get all the cheerleaders on board. Bear market over, all-time highs coming. The Dow is in a bull market territory now. The bear market's over. They made the higher high. We're up 20% off the lows, a new bull market. That's what I wanted to see. And we're kind of seeing that back off now. To be fair, I didn't think this trend line would necessarily hold on the first try, or I thought we would get through it and maybe up to 415, at least to fill this gap, maybe 415, which, hey, it's still possible. We still could put in a higher low, but now with this green bar low going, the chances that are very, very, very significantly reduced. At least that's according to the methodology I use. Anyways, speaking of the Dow, I'm just going to use the diamond here. So it does look like we were able to 336. Yeah, so the Dow was just able to stay back above that inside bar low there. So 2 out of the 4 major indices have broken down. So the Russell, we talked about that yesterday, that broke down, and then the spiders. So now we have the NASDAQ and the industrials that are holding up still. Areas on the downside for tomorrow for the Russell. There's your 50 moving average. That would coincide with the 50 MA on the Qs and probably the 390 level on the spiders. Bounce levels for that, probably like a 50% retrace, something of that nature. By the way, the Russell never made a higher high, whereas all the other indices did. So small cap showing weakness here, leadership to the downside that suggests money flow out of risk. So keep that in mind. Anyways, interest rates today, 10-year got hit pretty hard. So now we're into that 3.4 area. So possible, we're kind of into a little bit of support here on the 10-year. If I could draw back this trend line. Yeah, it's going back to right here. So we have a level that's coming up pretty shortly. So could be getting a bid off of that. You are into the 100 moving average, but we did consolidate a little bit. And again, this trend line here, the white one there, is upsloping. And that goes back to, we got to go to a monthly. So that goes all the way back to 2013, 2014. That's an upsloping trend line. So we're kind of back testing this area. So we could see yields get a little bit of a bounce here in the near term. Doesn't mean they can't trade a little bit lower. TLT, we're looking at the TYX here, but that's had a nice run. So approaching the 3.4 handle, maybe it wants the 200 moving average as a gap down in that area. But TLT got through my resistance level, and it only took 2 days to pull back. And that was a weekly level too, just for reference there. And then take a look at this trend line here on the daily. That looks like a gap. I mean, you gapped right above that trend line. So that's a pretty good show of strength there for TLT. Saying all that because, again, it looks like the market's really starting to price in recession risk. And with bonds bidding here, the yield curve is not improving. It's not like the bonds are bidding and the yield curve is improving. It's worsening. 3-month 10-year was almost inverted by 90 basis points today. That's massive. 2s and 10s, 84 basis points. 5s and 30s did uptick a little bit here, but still down about 20 basis points. And then the 10s and 30s are basically at parity. So problems out here. And I think that is starting to affect banks here. Now, the 2-year did bid up, but, the curve's not improving at all. So that is a problem here. And I think we're starting to see that really, we talked about XLF. Look at Bank of America. This is cut like over 50% of the rally in almost basically just the last 4 days. Wells Fargo, huge trouble here. It does have a gap, so maybe you can get a bid here tomorrow. That would, help coincide with the bounce theory I was just talking about in the spiders. You have a little bit of a pivot here on Citigroup. Goldman Sachs has some support at 360 that needs to hold. JP Morgan's been holding up okay. That one's, I feel like they're really kind of propping that one up to keep the rest of the sector up. But, Morgan Stanley, again, you have a gap down here. You got a little bit of a minor gap there. So again, they could get a bounce here, but it does look like the market's starting to price in this risk. Take a look at broker dealers. That closed below Wednesday's low as well. So I've been saying this for quite a while. Why are these broker dealers? Why are the banks still rallying? We looked at JP Morgan, just uncontested rally here throughout October. Goldman Sachs, uncontested rally, no pullbacks. And I think it was just the market. My kind of theory now is that there is market participants trying to get ahead of the yield curve, and they were just early. And they're figuring, hey, this is going to destroy the balance sheets of these banks, and they were trying to short, but they shorted at the lows when they, probably should have waited for a pullback or I should say a bounce. But anyways, you're starting to see this start to creep in here. Credit Suisse basically back at the lows too. So contagion, maybe. We'll see. Anyways, talked a lot about rates there. So semiconductors, we mentioned that flat on the day, still above that green bar. IGV negated that green bar yesterday and also today closed below this pivot. So now we're outside of this range. Guys, there's a big air pocket here on IGV down to, basically 250. There's this gap here and then the actual gap all the way down to 242. I think if you get down there, it's basically a foregone conclusion. You're going to hit that triple bottom regardless. So lots of weakness here in cloud. I'm watching CRM. This thing's been getting absolutely annihilated. Take a look at that big bear base there. Move down, bear flag, move down, bearish consolidation, rejection of the 20-week moving average, and now pushing lower. So CRM, you got, not much until the pandemic lows here on the weekly. So Cloud software definitely in rough shape. Transports, we mentioned that a little bit here. Still holding that 100 moving average, but down, basically 1% on the day. So not a good look here. Really, you want to see it bounce nicely off of that, but it's been dead cat so far. We're back below this trend line. We negated that green bar. We negated this candle, this pivot. So issues here with the transports overall. The jets, on the other hand, really the only sector that's been holding up, although it did get hit pretty hard finally today, down 3.26%. Some of the trucking names, JB Hunt, XPO, been holding up okay. And then, the rail strike is a little bit of a narrative here. You see CSX, Norfolk Southern, if I can type it in right. Norfolk Southern, big hit yesterday, inside day today. UNP managed to scratch out again. So, FedEx, UPS, pretty big hit here. So lots of technical damage done. Anyways, Homebuilders, XHB, again, scratching out again. So this still remains a strong sector here. Going off the ITB, this is actually still holding that 20 moving average. So Homebuilders holding up okay, showing some leadership. We'll give them the benefit of the doubt for now. I think they're definitely liking the fact that bonds are bidding. That's kind of, at least in the near term, that's sort of the reasoning for it. Could also, again, like I said yesterday, could explain the reason why the NASDAQ is slightly outperformed the last couple of days. So something to keep an eye on here. But ITB and XHB are holding up. VNQ in much weaker technical shape here. Really kind of a nothing burger for the most part today. But it did scratch out again in a down market. So we'll make note of that. We talked enough about XLF. We mentioned broker dealers. Let's get into crude. So crude breaking down here. So this is why I just said, just avoid it right now. You got almost to the level a couple weeks ago, and I said I didn't get there, so I don't want it. And then once we got to it a few days later, I still don't want it because now you put in a lower high. So just because the level is a level, it doesn't matter all the time. It depends on how it gets into that level. So that's why I've avoided it. And now crude, rejection, 20 moving average, 1, 2, 3 down. Pretty good look here. I do have some levels worked out for crude. Again, there's that 200-week moving average there. That would be kind of on the low end. But for right now, crude, and ever since I saw that weekly close below this green bar, and just to show you, so if you guys are new with my methods, so as soon as I saw this weekly close below this green bar, I said, well, that's a failed inside bar. That's why I'm making such a big deal out of this spider's move, because I've seen this happen many times. In fact, it's been the sell signal for some of my best trades ever. So any case, crude here, it does have a little bit lower to go. If it gets straight into my level, I'll jump in on that. If you want to get in on that, come find me on Carnivore Trades. We'll be taking that trade. But for now, crude taking a hit. XLE down as well, below the 50 moving average. I think this one's 82.50. XOP now below the 200 moving average. There's a little bit of a gap there. If you get through that, you've got 125. That should be pretty good support. And then OIH, same thing. So that's now basically testing the 50 moving average. That should get a bounce there. But you guys know 260 is the big level on OIH. Nat gas, nice pop here. I'm getting messages about nat gas. I don't really like it in here. I told you guys 550 Monday. We got there. We're getting a bounce. It's had a nice little moonshot. Nice little uptick there intraday on nat gas. It's pulling back now. The better level's down around $5 though. But we'll have to see how it gets in there. If we start consolidating sideways, then forget it. I don't want it anymore. But for right now, nice little bid there on nat gas. We'll see if it goes up there and fills that gap. And then we'll just kind of evaluate it from there. But nat gas up 6.25, so nice day for that. Dollar index, really kind of flattish. Well, actually, no, down 0.5% almost. I was going to say flattish to negative, but down 41 basis points. So it's still kind of just hovering around this 200 moving average. And this could be, if this starts to downtick, it could give you a little bit more upside in, the equity markets. As I've kind of said, we do probably get a bounce here. And I said, there's still a level lower that I like for the dollar, 103, 102 in that area. Why is the dollar down with the markets under pressure today? So if we're pricing in global recession risk, which countries do you think are going to do worse than the dollar? Like all of them, right? So that could be your reasoning that there's a little bit of a dynamic shift in the dollar index right now. Ultimately, once fear kicks in, this will go much, much higher. So just be aware of that. But dollar could come under a little bit of pressure here, so just be aware of that. Gold getting a nice bid here, up 1% on the day. I wouldn't do anything with it right now, but it's holding up okay. Same thing with silver. We closed out a nice winner on that last week. I don't want anything to do with it right now. It needs to do more backing and filling for me. And platinum, same kind of thing, although nice little outside day today, up 1.66%. So platinum holding up okay. And then copper here also hanging in there. The only thing I got to say about copper, I haven't really talked about that much recently, is you do have you still kind of have like this parallel, kind of like weekly bearish pattern. So on the weekly, you're in kind of this bear flag. And again, if the market starts really, if the economy really starts to slow down, could put pressure on copper. But anyways, it's holding up okay for now, so we'll give it the benefit of the doubt. And then lastly, Bitcoin, that was under a little bit of pressure today as well, back below 17,000. Nothing's wrong with the pattern just yet as far as this little inside bar. It's off the lows just a little bit here. It's kind of holding that 20 moving average. We'll see what it does tomorrow. I would think tomorrow it can possibly get a bid with the market's cooperation. But again, big picture, big bearish inside bar. So just be aware of that moving forward. Anyways, back to the spiders here. So failed inside bar, that's two. Well, Russell, spiders, Dow transports, XLF, all negating the supposed, bear market over pump. So that is a problem here. And I don't care that we're pulling back. The fact that we negated that's the problem. So something to be careful of. Again, I do have a minor little bounce kind of penciled in over the next couple of days. We'll have to see how it trades up into CPI. It'll give us a better picture of whether we're going to put in a higher low or a higher high. Anyways, guys, going to wrap it up here. Come find me on CarnivoreTrades.com. Talk to you all tomorrow.